Good afternoon and welcome back, folks. This is US Home Talk. We are live every Wednesday at noon. And of course, we're available anytime via podcast, anywhere and everywhere that you find your podcasts. Although we have to admit, we have to work on the podcasting search engines to get us to the top of the list. But live every Wednesday at noon. You can find us always on our website, ushometalk.com. We've got a real estate text line set up. So if you have questions during the show, shoot us a text. That number is 612-234-7585. You can text us your questions, anything and everything real estate related. Also, the comment section on Facebook. Excuse me. We're also live on YouTube. And so we welcome all questions and comments that way as well. We appreciate everyone who's tuning in live today. Or if you're catching us later in the week, that's one of the beautiful things about podcasts is you can find us anytime, anywhere that you're available.
Right. It's a beautiful thing. Yep.
Isn't it a beautiful thing?
You can find us just wherever,
whenever you need us. Jason Walgrave here with Walgrave Real Estate Group and the Minnesota Real Estate Team at RE/MAX Advantage Plus. Of course, we have the great mortgage Michael Overson with Illuminate Home Loans. We've got Evan Little with Paragon Insurance. He is not only our insurance expert, the guru, the wizard, the master, the Darth Vader of insurance. I don't know, maybe because we can't call him the Yoda. Maybe let's call it the Wookiee of insurance.
Oh yeah, there we go.
He's really? He's kind of furry, right?
The Wookiee of insurance.
I'm probably more of a Wookiee than he is right now, right? Marcus Walgrave with Hager Realtors. He is also usually with us on the show, but he's got some track and field Howard Wood relay board obligations that he has to attend to in the springtime. So I think he'll be back next week on the show. Folks, anything and everything real estate related, whatever questions you might have, simply comment in the comment section on Facebook, or you can text us your questions to 612-234-7585. That is our text line. Also, our real estate hotline number. You can call and text that number 24 hours a day, 7 days a week, 365 days a year. Man, we are available.
We should change it to like 400 days a year.
Sometimes I feel like I work 400 days a
year. Turn those on. Yeah. We're here 36 hours a day, 400 days a year. That's how available we are.
But
love it.
With the teams that support us, we're virtually available every day, all day, every night, all night. So we appreciate all of our team members and we appreciate all of our clients and customers that have been working with us for many, many years. All right, folks, what are we talking about today? We're talking about why now is a great time to buy a home, to buy real estate. Contrary to many of the media outlets that we are exposed to, whether that's TV or radio or newspaper, they may have been suggesting that real estate is not a great investment and that buying real estate is not it's not a great idea right now. And so Mike and I, Evan and Marcus, disagree with that. We think now is a great time to buy. And today we're going to talk about why it is a great time to buy a home or an investment property. In fact, we've got an investment property show coming up here in a few weeks, and we'll talk about a different area of buying real estate that's investment focused rather than your home. But today we're talking about your home. There's some good deals out there, and that statement, I think, to some people would be a surprising one. But the reality is there's opportunities in purchasing real estate in the Twin Cities and the South Dakota market and many areas throughout the country where there's still some good deals out there. New construction, especially, we're seeing probably the best deals with builders that have a large inventory of spec homes, some of the national builders, and even some of the mid-size local builders that built a lot of spec homes last year. Some of them are still holding inventory. Builders are given some pretty incredible incentives, whether it's price reductions, whether it's extra amenities, or finishing the basement. You're getting upgrades. You're getting a lot of different opportunities. And we've also seen in the last few months, although it is, we are in a hot seller's market right now because of the inventory, right? And it's very similar to what we saw last spring at this time. Even though the interest rates are a little bit higher, the inventory is still low. But sellers today, more of them, unlike last year at this time, they're willing to do some stuff like participate in the buyer closing costs. They're willing to accept inspection contingencies, even home contingencies. Mike, you and I just got one done in the last couple of weeks where we had a contingent buyer. They actually had the ability to go non-contingent. They just weren't comfortable doing it. So we made a contingent offer on a house in the mid sixes. It was accepted by the seller. So we had an inspection contingency and a home sale contingency. And then over this past weekend, we got their home sold. It went on the market last week. We had it sold in a matter of 4 or 5 days. And so now we're going to be able to remove that home sale contingency very shortly here. So there's an example where last year at this time, I don't think there was any chance that they were going to get that house with a sale contingency and even an inspection contingency. So now is a great time to buy. There's deals out there. We're still seeing a lot of multiple offers though. So depending on the price range, depending on the property and the location, there's still a lot of multiple offer activity. But you just got to hire the right team. You got to hire the right agent, real estate agent and team. You got to hire the right mortgage professional and team. And collectively, we can work together to really find you an opportunity to get into a home. So your thoughts on that, Mike?
So when you say there's deals out there, there's almost two ways to look at that, right? There's the deal of like the actual cost of the house and things like that. Then the other part of the deal is, okay, so what's your monthly payment on buying versus renting? Because that's the other part of where you might be able to get a deal, because we all have to live somewhere, right?
Yes.
So you're either going to buy a place and pay your own mortgage, or you're going to rent a place and pay someone else's mortgage. Well, what does that rent cost for the same house? If you run the numbers today, the deal you get is on your monthly payment. Typically, your monthly payment is lower on the buying side of things versus renting, because rents have gone up just as much or more than home prices have gone up. And so that's the other side of the deal is your monthly payment, your monthly outflow, probably going to be lower on the purchase side of things these days.
Yeah, I mean, I agree with that. We run that scenario all the time where we've got clients that come in, they're renting, maybe they're renting a house for $2,800 a month, and they come in and they say, look, we want to keep that monthly budget where it currently is, right around $2,800. What kind of a house can we get? What can we buy for that? And we show them examples. We run all the numbers. Here's what the monthly payment's going to be, including principal, interest, taxes, insurance. And here's an example of a dozen homes that are for sale in that price range that fit that monthly payment. And most of the time, you can get more house if you're buying it. And they're surprised and they're shocked and they're going, well, why would I rent any longer if I can buy a house? And then there's all the additional things that the benefits come along with owning or buying a house, all of which we're going to go over today. There's great mortgage options, guys. And, interest rates went up in September, October, a shockingly high amount quickly, as far as how much the rates increased. And a lot of people, they were overwhelmed by that. They were kind of stuck and jumped on the fence. I don't know if I want to buy. These rates are freaking me out. Most of the buyers that we're working with, rates aren't really a talking point anymore. I mean, they want to know what their options are for the mortgage rates, but it isn't, the whole feel of it is very different than it was in September and October. Don't forget, if you look at the 40-year average, so if you go back the last 40 years, the average 30-year fixed mortgage rate is 8.25. And so, if we're sitting around, mid to low sixes, we're still a fair amount less than what the 40-year average is. And then we talk about getting creative with the loan products, and I mean, a lot of people don't know that there's permanent buy down options, because sellers are willing to contribute now. There's opportunity to buy that rate down permanently for the 30-year term of the loan. But Mike, I know you guys have been working very hard to deliver creative options for our clients on what mortgage products are out there.
Yeah. Yeah. There's a mix of buy downs, and a lot of people are, will know what a buy down is. And a lot of people don't as well. But yeah, getting creative with, hey, this is the type of monthly payment that we're comfortable with that we want to stick to. How do we get there? So then it's a conversation of, okay, here's a couple different ways you can get there. Right. So you can do a permanent buy down. You could do a 2-1 buy down. There's all these different options that we can go into and show all those clients how it works. But really, if we know your goals, so it's all about, hey, here's your goal. Here's where you want to stick to. Okay, we'll get creative. We'll figure out a way to get there, and then explain it to you on how it works. And a lot of people are surprised. It's like, that's actually much better than I expected it to be. Right, the end result is so.
Yeah, it is. And we helped one of the agents in our team. She was working with some clients this past week, and they had identified a beautiful home in the upper 700s price range. Everything about it was exactly what they were looking for. The builder was offering a 2-1 buy down, in which they thought was great, but their concern was it's only for 2 years, or it's only for 1 year, depending on the product. And so they didn't, they were really pulling back and thinking they weren't going to move forward with the purchase. They jumped on the phone with Mike, and Mike explained, well, look, we have other options out there. We have permanent buy down options. Let's take a look at what that looks like, what your payment would be, what your interest rate would be for the 30-year term, and the cost of it. And so we, with Mike's help and all the knowledge that he brings to the table, they got their questions answered, and they got their concerns relieved, because there was a solution to the standard fixed rate right now. And so it's always exciting, and I love those deals where we come together with clients, and they've identified something they love, and they want to buy, and then there's an issue. In this example, it's the high interest rate. I don't want to lock in to a 6.5% interest rate on this house, and because this price range. And so Mike found a solution. It made sense for them, and so now they're going to be moving forward, and we couldn't be more excited for them.
Yeah. Don't throw in the towel. Don't throw in the towel until you talk to us.
Yes.
Because they were about ready to throw in the towel on this deal,
Yes.
and it turned out to work out better for them than they actually anticipated or thought it could work out for them.
Yes.
So that's where the whole experience thing comes in, right?
Yep.
It's where experience is paramount there, because we've seen situations like this before. I think we're masters at our craft on how to take the moving pieces of the puzzle, and we get them to fit together. That's exactly what happened with this one.
Yeah, I mean that's a big part of our job, right? Is to solve the problem, to overcome the objection or the concern that our clients have. And the longer you've been in the business, the more deals that you've done, the more transactions you've been a part of, that knowledge base gives you the tools to give your clients the best possible representation, which means you're going to get them the best deal, the best rates, and really look out for their best interests. And a lot of it is I mean, we have, Mike, you and I, and Marcus and Evan too, we have a desire to deliver this top tier level of service, world-class real estate experience, right? And so we're constantly learning, and as the business changes, and we're making sure that we're on top of our knowledge base, but we have all of these years, decades worth of experience that gives our clients, it gives them an edge, and you look at, if you're in a multiple offer situation, right now, if you're a buyer and you're going into multiple offer situation, do you want an agent to represent you that is newer, that only has 1 or 2 years worth of experience, 3 years of experience? Or do you want someone that has been in the business 10 plus years. We have developed a 19-step strategy to win in multiple offers. Well, how do we develop that strategy? Over years and years of experience. And so it's so important that you hire the best in the business for real estate and mortgage and insurance. There's so many different options. There's 100 million real estate agents in the United States, and there's 200 million loan officers in the United States, and probably a billion insurance guys in the United States. Is that
Numbers
accurate?
not necessarily accurate.
Yeah. We might want to
No,
fact check
why?
those. Numbers. What do you guys put on the listings for like square footage stuff? Numbers are I can't remember. It's like something.
All
numbers
information deemed reliable, but something
deemed reliable, but not. Yeah.
yeah, but not guaranteed.
Yep. There
We
you
should
go.
probably start each show with that. Why else do you want to buy a house? What are the benefits of buying a home in 2023? There's tax benefits. So there are tax benefits. In most cases, you're able to write off the interest that you pay every year on your mortgage. And so that's a benefit that you don't get if you're renting. Mike, he said in the beginning, look, you're going to make a mortgage payment regardless. Either it's going to be yours or it's going to be your landlord's. And so your landlord as an investor, and we'll talk about this more in the investment show, they have a whole bunch of tax benefits of owning real estate. You've got the interest write-offs, you've got improvement write-offs, you've got depreciation write-offs. There's tons of things, tax benefits of owning investment real estate. But as a homeowner, you have those as well. And so, I don't think any of us like paying taxes, or certainly not paying more than we should need to, or obligated to. And so home ownership can be a great way to reduce that tax burden and your taxable income.
Yeah.
All right, what else?
Real estate, baby.
Real estate. We love real estate. It's going to be yours, right? And so that's one of the benefits of owning and buying a home in 2023 is there's this, not too many renters have pride in rentership, right? Some renters, they'll do an okay job taking care of the property. Most of them just don't, because it's not theirs. When you buy a home, it's going to be yours someday, because when that mortgage is paid off, and whether you have a 30-year or a 15-year mortgage, whatever the case is, when that mortgage is paid off, it's yours. And so there's something about pride in home ownership when you own the property and when you're working to pay off that mortgage, and there's that light at the end of the tunnel that that property it's going to be yours. It's an ownership, pride of ownership.
Yeah, and if you want to put up, that kitty wallpaper that you've always wanted, Jason. Remember back in the day before you bought your first house, you're like, man, I'd really like to put up this little kitten wallpaper in my place I'm renting now, but the landlord won't let me.
Yeah.
You bought your first house, first thing you did.
Kitty wallpaper.
Kitty wallpaper, right up.
The whole main level.
Yep.
The whole main level. And if you want to put up a permanent fixture in the living room, maybe it's a statue of yourself or someone that you're fond of, you can do that. You have the ability to, make changes, and especially to the inside of homes. Some developments have some rules and regulations on colors and things like that. But it's going to be yours someday, and you have the flexibility to, personalize it however you feel that you want to on the inside, and it's pretty awesome. You've seen some crazy stuff, though. I'll tell you what, man.
Some of these. Some of these pictures that come over in appraisals are pretty funny.
It is, and that's we've talked about that before. How to prepare your home for the market, and we have seen some very odd and often entertaining things in homes. One of
the best ones that did was doing a refinance. So we did a ton of refinances in 2020, 2021. Refinance came over, appraisal came over, and there was. They got to take a picture of each bedroom, right? So each bedroom has to have one picture taken of it. So usually the appraiser just stands in the front doorway and takes a picture to capture most of the bedroom in one photo. And, there was a kid sleeping, in the bed, leg hanging out, the covers are all messy. One leg's hanging out, one arm's hanging out, head of the pillow and stuff like that. I'm like, oh man, guy had to go in there and like snap a picture, right? And kids sleeping right in the bed. So it was hilarious.
Yeah. We've seen some hilarious stuff for sure. You can get a better home. And so what does that mean? It means there's more homes that are for sale that you can purchase generally than there are homes to rent, especially when you're talking about single family homes for rent. There's way more homes for sale than there are for rent. So you have more choices, you have more options. You're gonna likely get a better home to buy than you are a home to rent. And more options is better, right? I mean, we want as many options as we can when you're talking about real estate and mortgage. And so generally speaking, you can get a better home if you're buying than if you're renting. Buying a home offers inflation protection. And so historically, appreciation over time outpaces inflation, although this year that's probably not going to be the case. But if you look at over time, it does. The purchase of real estate, the purchase of your home offers that inflation protection. It's also risk capital. And so we hope that the economy, if it picks up, you stand to benefit from that, even if your goal is just to have a nice place to live. And so, you've got your tax benefits, you've got your inflation protection, you've got your risk capital, and then it's forced savings, right? And so you've got a mortgage payment, and I don't think they're interest only mortgages any longer, or at least not in general.
Yeah, there might be some out there, but it's the non-QM is what they call it, right?
Yes.
Non-QM is basically the nice way of saying subprime.
Yep.
Right? So there are a couple options out there in that, but you're paying way higher interest rates just to have the option to pay interest only. So Are you really saving much on your monthly payment by paying interest only at a higher interest rate? No, not really. You know what I mean? And especially if you take into consideration you're not paying any principal balance off at all, then it really it's a tough game right there, especially these days, and it does not make sense in most cases. There are some cases where definitely those interest only loans do serve a place in the marketplace for certain situations, but those situations are few and far between where it actually makes sense.
Yeah, construction loans I think are one of those options. Or if you're remodeling a home and need a construction loan, or you're building a home, a lot of times those products are set up on interest only, but they're short term. They're 12 to 24 month terms on those. But part of that payment you're making is going towards the principal, which is savings, right? I mean, if you look at the last 40 years, the average appreciation rate in the Twin Cities area is over 4%. And so you've got, and that's a whole nother benefit. You've got appreciation that's going to happen. It's been way more than that in the last 5 years each year. But you're making that payment, and a part of it is going to interest, which is a tax benefit, and a part of it is going to the principal, which is for savings, because you're paying down that principal balance, and then you have appreciation. And so those three things alone are massive benefits of buying a home. And even in 2023, with the interest rates a little bit higher, but we have all these options, these creative mortgage options to take a look at. So,
and homes are still going to appreciate this year.
Yes.
So no matter what you hear out there, I don't care what you see out there, what reports you do, this and that, you talk about inflation and interest rates and this and that, the supply of homes out there is so low. Our supply is so low. The supply and demand curve is still way in favor of sellers and appreciation going up on homes. So truly believe if you can buy a house today for $400,000, if you wait till next year, that house is probably going to run you $415,000 to $420,000.
Yep. I think that's a conservative estimate as well. And we talk about that so much with our clients is the cost of waiting, right? And so sometimes first-time home buyers will come in, they'll say, well, I just want to save up another 10 grand, so I'm going to wait till next year. And we say, okay, well, what's, what kind of price range? Maybe they're in a $400,000 price range. We say, okay, let's look back the last 3 years. and look how much that $400,000 house has appreciated every year. And so what's the cost of waiting? An extra $10,000, putting down on a house is going to save you what, $60 a month, maybe?
Yeah,
I
roughly.
mean, $60 a month that you're going to save, but it's going to cost you an extra $20,000. If you wait a year, likely will cost you an extra $20,000. So, it's so important to team up with the top agents and loan officers to make sure that they can explain these things to explain what it means to buy now at today's rate and terms and home prices, what it means to wait based on historical data, and take a look at all the information so that you can make a decision that is best for you and your family.
Yeah, if you go back, so let's go back to 2020. Let's go back to January 2020, right? So if you bought a house, let's say you were looking at buying a house, you ended up not buying a house in 2020 because you were going to wait for the next year. On average, in 2020, home appreciation went up, 13 to 15%?
Yep.
In 2020, because COVID happened, rates went way down, and you got all this in a multiple offer situation, right? And it's pushing those values up. So you waited a year from 2020 to 2021. Let's say a $300,000 house back then now costs you $375 a year later because of the appreciation. 360 to let's say 350 to 375. So waiting that year would have cost you another 50 to 75 grand in that particular situation. Go to 2021 to 2022. Appreciation not as high, but still was probably still probably 8 to 10.
Oh yeah. Yep.
Probably maybe closer to 9 to 12, so now you gain that again. So if comparing January of 2020 to January of 2022, you're paying 75 to 100 grand more for that same house if you would have waited those 2 years. Now, appreciation typically doesn't go along at that clip, right? It's usually not that fast. But this year we're still going to see it. Jason, I think you're on the same page with me, and we're still probably going to see 4 to 7% appreciation this year.
Yeah, I think so. I think that's pretty accurate, and it's, we've heard the statement a lot over the last couple of years that the reason the real estate market is so crazy is because it's all COVID driven. It's COVID driven, and that was partially due. The interest rates, I think, were affected a lot because of COVID, but the home prices, not necessarily. And the inventory of homes that we have for sale and that we've had for sale for the last 5-6 years, it's been low. And so that was pre-COVID that the inventory was low. Why is it low? Well, it's low because between 2010 and 2020 in the United States, there were 80% less homes built. And so why did that happen? Well, because we had the real estate crash in 2007, right? And so all these builders and developers and mortgage companies and real estate companies, they went under. They closed their doors. And so because of that catastrophic event, that meant for that 10-year block between 2010 and 2020, 80% less homes were built. So it's going to take, I don't know. I think it's going to take another 5 years until we get inventory back up to a healthy level of 18, 20,000 listings in the United States, because you gotta, it's going to take time because you didn't build for 10 years. It's going to take time to try to get that inventory back up to a normal level.
To catch up, right?
Catch up.
I don't even know if 5 years will do it, to be honest with you.
It's probably going to be more.
I think it might be. I think it's going to be farther down the line.
Yeah.
So just because you go that long, you go that many years building that fewer amount of homes.
Right.
And the time cycle to build right now is not 4 to 6 months.
No.
The time cycle to build your 2-story, 4-bedroom, 3-bathroom, 2-story house now is probably 9 to 10 months?
Yeah. That's
roughly.
Yep.
You know what I mean? So it just takes longer to build a house these days than it did, even going back 6, 7, 8 years ago. So yeah, I think it'll take even longer. And that just goes to show that our whole supply and demand curve on the real estate side of things, our supply is going to remain low. Our demand is always high. because obviously our population that's entering the home buying age is outpacing how many homes they're building.
Yes.
Right. So that supply demand curve is going to be low supply, high demand for several years to come. That's going to keep real estate prices and appreciation, up to where we think it's going to be.
Yep, absolutely. Folks, the best time to get a hold of us, or the best way to get a hold of us, is our website, ushometalk.com. We've got a real estate hotline number that's available 24/7. That's 612-234-7585. You can call or text that number anytime, and you can connect directly with Mike and myself, Marcus, or Evan, and all of our fantastic partners on the show. So we've got some exciting guests coming up in the next few weeks to come. I know we've got Jared Havens coming back on the show. We've got Ryan Boyd. He's coming on in 3 weeks. And so I'm looking forward to more guests and talking about all things real estate. Any last thoughts, Mike?
We're here to help. And it's still a great time to buy real estate. It really is. Interest rates are on their way down. Just today, the 3 loans that I've priced out today already so far, 5875, 599, and 599.
Oh my goodness.
So over the last week and a half, they've just slowly ticking down, right? Our market just as the market gets better for interest rates, that drives rates down. And just day by day, little by little, we're just ticking down. That interest rate is kind of coming down. Yeah. Last week at the beginning of the week, we were talking probably 6.375 ish. Yeah. Now we're talking 5875 to 599.
Wow. It's like a half point a week.
Yeah. So it's been great. It's been great. It's been a great move. So that's the other thing. It's like, interest rates are, like you mentioned earlier in the show, it was a big topic as they were going up, and it was fresh and new. And it was like 6 months ago, rates were at 3.5%. Now they're at 6.5%, right? That big increase stuff. It was a shock. It was a sticker shock to all of us. I didn't even expect that to happen. You didn't expect that to happen. No one expected rates to basically double to triple in a 9 to 10 month period. But now we're settling back in, right? This is the normal 5.99 to 6%. I mean, that's the normal 30-year fixed interest rate. Yeah. That's the way it's kind of supposed to be. It could never last at 2.5 to 3%. No. That's never sustainable. Right. And so we're kind of getting back to that where the interest rate is less of a talking topic. It is. Because we're back to normal, and the sticker shock is over, and it's like, okay, here's the new norm. We're back to the new norm, right? Yeah. We're back to the norm. And this is what it is. Yeah. And it's still better to buy than rent.
It is still better to buy than rent. I mean, anything in the mid 5s in my mind is a great interest rate on a mortgage. It really is. And so, Mike, if someone wanted to buy down that rate a half a point, what does that cost them?
That probably cost you. So if you want to get your interest rate from a 5.99 down to 5.5%, so a 0.5% reduction in interest rate, that's probably going to cost you 1 to 1.5% of your loan amount. So on a $400,000 loan amount, it's going to cost you $4 to $6 grand roughly to get it down that 0.5% of interest rate.
And folks, I'll tell you what, there's a lot of sellers out there that are willing to do that for you. They're willing to contribute towards your permanent buy down, whether it's a traditional seller or a builder. There's options out there. And maybe you think, look, I'm going to be in this house 30 years. So I'm going to ask the seller to, buy the rate down a half point. I'm going to buy the other half down myself, and then I'm going to be sitting at a 4.99 interest rate on a 30-year fixed. Yeah, we can do that. We can get you a 4.99 interest rate and a 30-year rate by buying down the rate via points.
Right.
And so it's just a fantastic time to buy real estate, to buy a home in 2023. Folks, best way to get a hold of us again is our website, ushometalk.com. Our real estate hotline number you can text or call 24/7 is 612-234-7585. That is the call or text line, 612-234-7585. Spring is definitely almost here, Mike. I mean, we're talking like 60 degrees on Saturday. It's coming.
It's going to be, 60 degrees on Saturday. It's going to be 72 here next Tuesday. Oh. There's going to be enough ice on the lake to go ice fishing. I've never ice fished in 72 degree and sunny weather. So I'm going to go out there. I'm going to drill myself a couple holes, and I'm going to get a couple pictures of me ice fishing in the middle of April when it's 72 out.
Yeah.
Because it's probably never going to happen again, right? It's like the
They
COVID
got-
of ice fishing. Probably never happen ever again. I got to take advantage of it. I'm going to do it.
They got on Saturday, Buck Hill is still open, snowboarding and skiing. And I think it's going to be like 61 or 62 degrees on Saturday. So I guarantee you there will be kids down there snowboarding and skiing with probably shorts and a t-shirt on.
I say
So-
shorts and no shirt. I guarantee there's no shirt.
There
There's a
will
couple.
be some. Yeah.
There's going to be no shirts coming down. A couple of those kids on Buck Hill, guaranteed.
All right, folks. Jason Walgrave here, Mike Overson, and Evan Little. We appreciate you tuning in. Hope you have a fantastic week, and we'll see you next week live at noon.